Most people in their 20s are making one silent mistake that ruins their financial future, and they don't even know it. While they're busy chasing trends, flexing on social media, or waiting for the right moment to start investing, time is slipping away, along with their greatest wealth-building advantage. But not you. Not after watching this video. This isn't about being rich overnight. It's about creating unstoppable momentum in your 20s that sets you up for a life of freedom. We're going to cover the biggest investing mistakes young people make, how to start with almost nothing, smart examples, not advice, and proven strategies that work. Stay until the end. We're saving the most powerful mindset shift for last. That's the one thing no one talks about, yet it makes all the difference. Let's dive in. Mistake number 1. Waiting until you have more money. Too many people believe they need thousands of dollars to begin investing. So they wait and wait. But the truth is, starting with $20 a week can change everything if you start early enough. Why? Because of compound interest. When you're young, time is your superpower. Even small amounts invested consistently over decades can lead to massive results. Waiting for the perfect time often becomes an excuse. Start small. Start now. Think of every dollar as a worker. The earlier your workers clock in, the more years they have to multiply your wealth. Mistake number 2. Thinking investing is only for the rich. A lot of people think investing is something only rich people do. But that's completely backwards. Investing is how people become rich. Even if you're on a tight budget, platforms today let you invest with just a few dollars. You don't need to be an expert. You just need to begin. Index funds, for example, allow you to invest in the entire market for very low fees. These are not investment recommendations, just examples of what's possible. The point is, investing is more accessible than ever. And if you get used to being an investor now, that identity stays with you for life. Mistake number 3. Trying to get rich. Quick crypto pumps, meme stocks, day trading. These things may seem exciting, but they often end badly. Why? Because chasing fast money usually comes with fast losses. The truth is, real wealth is built slowly. Long-term investing consistently beats short-term speculation. Avoid the temptation to beat the market. Instead, aim to own the market. Buy, hold, and stay the course. The calmest investors are usually the richest. Mistake number 4. Not understanding risk. In your 20s, you can take more calculated risks because you have time to recover. But that doesn't mean you should be reckless. Understand the risk-reward balance. A diversified portfolio, spreading your investments across different asset classes, helps you grow steadily without being wiped out by a single bad bet. Don't put all your money in one stock, one coin, or one trend. Think long-term and spread your risk wisely. And understand this. Being too conservative can also be risky, especially when inflation eats away at your savings. Mistake number 5. Not having a plan. Without a plan, you'll get pulled in every direction. Create an investing strategy that matches your goals, risk tolerance, and time horizon. Are you investing for a home, financial independence, early retirement? Write it down. Automate your contributions. Revisit your plan once or twice a year, not every day. The rich don't obsess over prices. They stick to the plan. And the earlier you set your direction, the less likely you'll be swayed by hype or fear. Mistake number 6. Ignoring fees and taxes. Every dollar that goes to fees or taxes is a dollar not working for you. Choose low-cost investment vehicles, and be aware of how capital gains taxes or account types affect your returns. Tax-advantaged accounts are your best friend. Even 1% in fees can cost you tens of thousands over a lifetime. Now let's get into proven strategies you can use right now, even if you're starting from scratch. Strategy number 1. Automate everything. One of the easiest ways to build wealth is to automate your investments. Set up automatic transfers to a brokerage account every payday, even if it's just $25. That way, you don't rely on motivation or memory. You build the habit first. Over time, you can increase the amount, but the system stays the same. Consistency beats intensity. Even on bad months, your system keeps working. Strategy number 2. Start with index funds. Again, this is not financial advice, just an example. Index funds like those tracking the S&P 500 are simple, diversified, and have historically delivered solid returns over time. They're perfect for beginners because they require almost no management. You're buying small pieces of hundreds of companies in one move. It's boring, but boring is often profitable. The less exciting your portfolio is, the more likely it's actually working. Strategy number 3. Use a Roth IRA or tax-advantaged account. If you're in the US, look into Roth IRAs. You invest post-tax money now, and it grows tax-free. By the time you retire, that money can be withdrawn without paying taxes again. Starting a Roth IRA in your 20s is one of the smartest financial moves you can make. If you're in another country, research your version of tax-advantaged retirement accounts. These accounts are like rocket fuel for your investing engine. Strategy number 4. Reinvest your returns. Any dividends or gains you make, don't spend them. Reinvest them. This is how compounding works its magic. Over time, the snowball grows, and the returns on your returns can become larger than your original investment. Let your money feed itself. Think of it as planting seeds that grow into trees that drop more seeds. Strategy number 5. Learn while you earn. While you invest, continue educating yourself. Read books. Watch financial YouTube channels. Listen to podcasts. Your knowledge compounds just like your money. The more you understand, the better decisions you make. But avoid analysis paralysis. Learn enough to act, and then keep learning along the way. Education multiplies your results. Strategy number 6. Side hustle and invest the profit. If you have a way to make $200 a month extra, freelancing, reselling, tutoring, take that and invest it. Don't inflate your lifestyle. Use side income to fuel your investments. That money can grow into tens of thousands over time. Now let's talk about the different investor types. Conservative profile. Focus on safer assets like bonds, cash equivalents, and balanced index funds. The goal is preservation and slow, steady growth. Moderate profile. A mix of stocks and bonds with an emphasis on broad market index funds. This balances risk and reward for long-term goals. Aggressive profile, mostly stocks, potentially including small cap or international markets. Higher volatility, but higher potential returns. Ideal for young investors with time to recover from downturns. Again, these are general categories, not recommendations. Know yourself. Now the most important part, the mindset. You have to stop thinking like a consumer and start thinking like an owner. Every time you buy something, ask, is this helping me build wealth? Or just look wealthy? Be patient. Wealth isn't built in weeks. It's built in years. Stay consistent. Turn off the noise. Ignore hype. Stick to your plan. And above all, believe it's possible. The difference between those who build wealth and those who don't often comes down to belief. If you believe investing is for other people, you'll never start. But if you believe you belong in the game, you'll take action, even if it's imperfect. Here's your simple action plan. Pick a trusted investing platform. Set up automatic weekly contributions. Choose low-cost, diversified assets. Reinvest everything. Learn constantly and stay the course. Review once a year, not every week. The earlier you start, the bigger the reward. Every dollar you invest now could be worth $10 or $50, even $100 in the future. You don't need luck. You need a system and discipline. Start where you are. Use what you have. Do what you can. And remember, your 20s are not too early. They are your golden window. If you made it this far, you're already ahead of 95% of your peers. Now turn that knowledge into action. If this helped you, hit subscribe, turn on the bell, and share this with someone who needs to hear it. You are not too late. You are right on time. Let's build wealth, starting now.